story number 4. John Gruss, we're going to go to you with story number 4. This is actually coming out of CNN. Again, going back to 2021, we had a collapse of a Champlain tower in Surfside. It was a disaster. Nearly 100 people died. $1 billion payout was made. Insurance prices in the state of Florida, as well as across the country, have really gone up significantly. Now, when you look at other parts of the country, they've had to deal with wildfires. We've had hurricanes. So insurance companies are under the gun as a result, as well as reinsurance companies. They're raising the rates. They're trying to reclaim some of the money that they basically had to pay out as a result of what happened since 2021. So it's created a lot of havoc. So, John, CNN, this is the headline. First couple graphs, and I want you to comment. Headline: the home insurance market is crumbling. These owners are paying the price. And here we go with the first couple graphs. The home insurance market is crumbling in New Orleans, leaving Alfredo Herrera with few options for coverage and skyrocketing insurance premiums. Herrera, 35, works in finance for a local bank. He bought his 900 square foot home in New Orleans mid-city neighborhood in 2020 for about $270,000 and lives there with his partner. In 2022, he paid $1,600 a year for home insurance, but last July, his insurer canceled his coverage, saying he was leaving Louisiana. In the past, acquiring or keeping homeowners insurance didn't present much of a problem, but as climate change increases the frequency and severity of extreme weathers, insurers, especially those in areas most impacted by floods and fires, are raising their premiums or pulling out altogether, impacting the affordability and availability of home and fire insurance. Herrera shopped around for a new plan, but he struggled to find a policy. Louisiana Citizen, the insurer of last resort for property owners in the state of Louisiana, was out of the question. It would have cost him more than $7,000 annually. Herrera eventually found a policy with a small company in the state that charged him $4,930 annually, a 208% increase from what he paid in 2022. John, we're complaining in Florida. We have an insurance crisis going on as a result of the Surfside collapse, the disaster. It's not strictly the state of Florida. This thing is going on nationwide. What is the cure? Is there any cure? And what is this going to do to housing prices? Because ultimately, when somebody's going in to buy and they're getting a mortgage, the lender's going to figure out exactly how much money are they on the hook for per month, whether it's real estate taxes, it's the debt coverage, as well as the insurance and everything else. So a high spike in insurance prices people can't afford to pay as much in terms of a mortgage. And therefore, the only way to get a deal done, I would imagine, is for prices to come down. Or am I getting that wrong, John?
Yeah, I mean, there was a story on Bloomberg, actually, just in the last 24 hours. I posted this on my Twitter feed, but the average premium for U.S. homeowners is expected to be $2,522 in the U.S. You know what it's going to be in Florida? $11,759 on
So we're talking
average.
5.5 times.
Yeah.
6 times.
Right. And so if you're talking about a $7,000 a year premium, that's a great deal. The average Florida homeowner is expected to pay $11,759 this year in premiums for homeowners insurance on average. So, I mean, it's just crazy. So yeah, I mean, we've been in this perpetual crisis now for 30 years since Hurricane Andrew. I mean, I mean, the state of Florida has never been able to solve the insurance crisis. Some years it's really bad. Some years it gets, we don't have hurricanes. And, I mean, there's just all kinds there's a witch's brew of things going on. I mean, it's not just climate change and hurricanes. It's a litigation. We had these like sinkhole problems, like roofing problems, contractor problems. FEMA. Now there's I'm reading about this huge brouhaha over on the west coast of Florida, in Southwest Florida. FEMA has come in and eliminated the discount for flood insurance in Southwest Florida, which means everybody's flood insurance premium is going to spike 25%. So there's this is a huge problem. And, of course, it's going to impact real estate. The one thing that is really concerning is that if you're going to buy a home, you have no idea what you're going to be paying in homeowners insurance from one year to the next. And it's that kind of uncertainty that really affects your view of how much you're going to be paying on a mortgage. I mean, if you're on a pretty tight budget, everybody's on a tight budget, and You don't know what your insurance premiums are going to be from year to year for your home. And it could be as much as $11,000 a year. I mean, this is like, you can't just pull 11 grand out of your, bank accounts all of a sudden. I mean, this is just, I think it's going to have a really negative impact on real estate sales. We've had this debate now in Florida for years and years, is the role of Citizens, the insurer of last resort. It's the state program that you can opt into if you can't find insurance. And, the debate's been on and on for years now as to what the role of Citizens should be. I mean, are we going to go to fully state supported homeowners insurance market? Or are we going to have this like weird hybrid where, yeah, we're going to have some insurance companies, and if you can't get it, you can go to the states. I mean, it's just been this like back and forth. And, with the legislature right now, I mean, they don't want another state agency, a state governments, but that's what's starting to happen. I mean, Citizens is the largest insurer in Florida now, the states. And as taxpayers, we're all on the hook for that.
Mr. Gruss, let me ask you, refresh my memory. You said there's a Bloomberg piece that just came out.
Yeah.
And nationally, the insurance premium is like 2,500.
Yeah. 2,000,
is that right?
2,522. It's expected to be 2,522. And in Florida, it's expected to be 11,759.
Okay. So if we just do some rough math and we look at this from an investor perspective, how do you overcome an increase in insurance if basically you're paying $1,000 a month just to cover your insurance? You got debt service, you have vacancies. I mean, how can you actually buy real estate to rent out if you suddenly could see your entire profit going towards insurance?
Yeah, but you can account for that in how you price.
Okay.
The problem is the uncertainty. So it could be $1,000 a month this year. It could be $2,000 next year. You don't know.
You don't know.
You don't know. So it's that kind of uncertainty, and how do you price that risk into your model if you're an investor, or how do you price that into your budget if you're a prospective homeowner? I mean, you can't. And it's the same with HOAs. When you buy a condo, you don't know what your HOA's fees are going to be from one year to the next, and they could spike by an extraordinary amount. That's the problem. It's that uncertainty. You just cannot budget for it.
Now, I've been making the argument, and this is for Lidia or Mr. Fakler. I've been making the argument. It's cheaper to rent than it is to own right now in Florida. Simply, even with the high rents, simply because of all the unknowns that John's sort of referring to. Season 5, people pushed back and said I'm wrong. Lidia, Mr. Fakler, do you think it's better to rent, or is it better to own, give them all the circumstances and the unknowns? The witch's brew, as Mr. Gruss said.
Well, I'd like to just go back to what Jean just said about the individual home buyer. I was thinking about how is that going to affect the market macro wise, because people are going to be sitting on the fence afraid that they're going to have to pay. They don't know how much they're going to have to pay for insurance. They're going to have to dig down and find out, and what's going to happen again the next year. Is it going to go higher? So a lot of uncertainty there for the home buyer, unless I'm missing something.
I think he's basically just summarized what John said.
Yeah.
I agree with him 100%.
Yeah.
Okay.
Yeah, it's better to rent.
Yeah, better to rent.
Lidia, critical eye, you're coming in here. You might have heard that the first time. I'm saying it's better to rent than to own. Am I batshit crazy, or do you think there might be some validity to that based on everything you're seeing and writing about?
No, I totally think it's easier to rent, especially if you're a first-time home buyer right now. I mean, if you get the red pin and Trulia emails and you see anything that's on the reasonable budget, as soon as you open it up, it needs major renovation, or it has outstanding code violations or liens. So anything that's reasonable right now, it's going to take a lot of work, and let alone the fact that, like you said, unknown, that who knows how much you're going to have to pay for insurance down the road.